Hi everyone, welcome to Investing 101 for Beginners. If you're new to investing and wondering where to start, you're in the right place. Investing might sound complicated or even scary, but today I'm going to break it down in simple terms and help you take your first step toward growing your money. Let's start with the basics. What is investing? Investing is simply putting your money to work to help it grow over time. Instead of keeping your cash under a mattress or in a basic savings account where it earns very little interest, investing lets you buy assets, like stocks or bonds, that have the potential to increase in value. The goal is to build wealth so you can reach financial goals like buying a home, funding education, or retiring comfortably. One of the most important things to understand is why starting early matters. Thanks to something called compound interest, your money can grow exponentially over time. Here's a quick example. If you invest $1,000 and earn 7% per year, after 1 year you'll have $1,070. The next year you earn 7%, not just on $1,000, but on $1,070. So your investment keeps growing faster as time goes on. The earlier you start, the more powerful this effect becomes. Before you start investing, it's important to set clear financial goals. Are you investing for retirement 30 plus years away? Buying a house in 5 years? Building an emergency fund, or wealth in general? Knowing your goals helps you decide what type of investments suit you best and how much risk you can take. There are many types of investments, but here are the basics. Stocks, ownership in companies. Higher risk but higher potential reward. Bonds, loans you give to companies or governments. Lower risk and lower returns. Mutual funds and ETFs, pools of many stocks and or bonds. Good for beginners because they offer instant diversification and risk management. 2 min. One of the golden rules of investing is diversification. Don't put all your eggs in one basket. This means spreading your money across different types of assets and industries to reduce risk. You won't get rich overnight, but you'll protect yourself from big losses if one investment doesn't do well. Now, how do you actually start? Open an investment account, a brokerage or retirement account. Start small, even 50 or 100 works. Choose low-cost diversified funds like index funds or ETFs. Consider using investment apps that make this easy and often have low or no minimums. Before we wrap up, here are some common mistakes beginners make. Trying to time the market. Don't buy and sell based on short-term ups and downs. Investing money you might need soon. Always have an emergency fund. Ignoring fees. High fees can eat into your returns. Investing can seem overwhelming, but remember, every expert started as a beginner. Start small, stay consistent, and keep learning. If you want, I can guide you through the next steps, like choosing specific funds or understanding risk better. Thanks for listening, and here's to your investing journey.